Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome back to the Halal versus Haram series. In this series, we aim to cover popular yet controversial topics in the world of business and finance from an Islamic perspective so that we can expose the truth. Halal or haram? There's so many young Muslim entrepreneurs out there who are hustling and grinding day in, day out, but they don't actually stop and think whether what they're doing is actually halal. And in this series, we aim to clear everything up. Today's topic is actually one of my personal favorites: investing in stocks. So for those of you who don't know what a stock is a partial share of ownership in a large publicly traded company like Apple or Microsoft. Buying ownership of a business in essence is halal, but there's a few other things that we need to take a look at. Many people are actually under the impression that investing is outright haram, and there's also many large high-profile scholars who also believe this. However, one thing that we need to keep in mind is that a lot of these scholars are actually speaking from their personal opinion, and they have not studied or done enough extensive research on these subjects to be able to give a fully extensive fatwa. So with this video, we're just going to stick to the facts and put aside all the bias. In Muslim Millionaires, one of the 20 plus halal ways to make money online that we teach is actually investing in stocks. One thing I'm gonna do is play you a small extract from one of our courses which teaches how to invest in stocks the halal way. Specifically, this module covers the Islamic perspective of how a Muslim can go about investing in the stock market.
So when we look at a stock as a Muslim, we need to find one which meets 5 requirements of the Sharia law in order for it to be Sharia compliant, meaning it has been reviewed by Sharia scholars and they have deemed it to be halal. Sharia law is also known as Islamic law. The main body for determining the Sharia compliance of a stock is actually the Accounting and Auditing Organization for Islamic Financial Institutions. There may be a slight difference of opinion for certain requirements, such as number 3 shown below. However, you should follow what you believe to be best from the advice of a scholar you trust. The first requirement is that the main operations of the business must be halal. This excludes any businesses who are involved in things such as interest, alcohol, gambling, pornography, etc. If the actual main thing the business does is not halal, then there is no point looking at the other requirement. The second requirement is that if the business has some haram income from things such as interest, this cannot be more than 5% of the total income. For example, if the business makes £100, then only £5 of the income or less can be haram. This doesn't mean we are allowed to keep this money, and we must give it away in a process called purification. More on this later. The 5% is only given as an allowance to make the stock market more accessible, and majority of those who disagree with the 5% aren't aware of the purification requirement. The third requirement is that if the business has any interest-bearing debt, meaning any loans which have interest on them, then it must be no more than 33% of the total assets. This is where the difference of opinion comes in, as some scholars believe it to be 30%. However, I follow the 33% rule. An asset is something of a monetary value, meaning it is worth money or it can produce money. The interesting thing about this 33% is that not only is it used by Muslims, but also many famous investors such as Warren Buffett. And if you have read Benjamin Graham's book, The Intelligent Investor, then you are probably familiar with this figure, as it is a good metric to make sure the company has enough assets to cover their debts. The reason behind this number is from certain hadith which mention 1/3 being allowed, and therefore it is the maximum allowed. The fourth requirement is that out of the total assets of the business, at least 20% of them must be liquid assets. And a liquid asset is an asset which can be converted into cash quickly or easily, which could be something such as property or machinery. The reason for 20% is because if the assets were 100% liquid, then it must only be traded at par value as per Islamic law, and therefore the well-renowned scholar Mufti Taqi suggests 20% being the appropriate measure. A liquid asset would also be known as a non-current asset. More on this later. The fifth requirement, which is more complex, is that the net liquid assets must not be a greater value than the market cap of the business. The formula for net liquid assets is total assets, tangible fixed assets plus inventory, liabilities. A tangible asset is an asset which has a physical value, i.e. can be directly / easily measured in dollar forms such as machinery. Inventory, stock, goods for sale is also a tangible asset, however it is not fixed. Non-current fixed assets are assets which the business plans to hold for more than 1 year. The market cap is calculated by the number of outstanding shares trading publicly, multiplied by the price of one share. The reason why this must not exceed the market cap is because then you would be buying a share which is not the same value as what you have paid. For example, if I gave you 50p for a £1 coin, this isn't the fairest trade dealer, and in Islam it is not permissible to exchange one amount of money for more or less money. So if you take the time to review a stock and you find it meets all 5 of these requirements, then it is Sharia compliant and therefore eligible for you as a Muslim to invest in. A much simpler, easier way is to use an app such as Zoho or Islamically, who do all of this for you. All you need to do is search up the company you are interested in, and they will produce a report which gives a label compliant, non-compliant, or questionable, which could mean there was limited information on the company, or there were allegations of immoral and unethical activity such as slave labor and sweatshops, or simply because there is a difference of opinion on whether the main operations is actually halal. Social media. I would urge you to proceed with caution with these stocks.
So that video summed things up, and as we can see, investing in stocks can be halal if done correctly. Remember, I'm not a scholar, this isn't a fatwa, so please do your own independent, extensive research. If you want to see the rest of the Halal versus Haram series, just like the video, subscribe to the channel, and head over to the playlist section where you can see all the other videos. And if you have any video suggestions or ideas that you want to see covered, just leave them below in the comments.